Let's have a conversation. It's an important one on how you can combine deal making and acquisitions with your regular financial life to become financially independent in 7 years or less, starting from scratch. And this isn't even being aggressive. Now, one of the things when we're going through the acquisition holdco process that I'm always telling people is we want to do deals that don't require a lot of your time. In fact, I put a max on it. I don't want people closing on a deal that's going to take more than 5 hours a week of their time. Now, why is that? Number one is that the overall goal is financial freedom. And so our goal isn't to do deals that are going to require 40-hour work weeks of your life. And secondly, there are a lot of deals out there that meet the 5 hour or less criteria. So why would you do that anyway? Just, hey, let's go work a little harder and find the right deal. But the overall and bigger picture is if you're building an acquisition holding company, you're not going to be able to do more deals if you're tied into working too much into a single deal. So let's go back to goal number one. The whole point of all of this is financial freedom. So the last thing that you should be doing is getting tied into doing a lot more work with each deal that you do. Now, I'm going to talk about this from a conservative standpoint. I want you to get to financial freedom, financial independence, and we'll talk about exactly what that is in less than 7 years, starting from scratch. And if you're crazy like me, I'll show you how you can do it in less than, around 3 or 4. And I think for most people, financial independence, even if you don't want to do I think a lot of this stuff that I'm going to talk about, you can do without getting into acquisitions. It just really speeds up the process. At the end of the day, financial independence is about earning enough from your investments that to basically cover your expenses. And I think a lot of people think that it's about earning a massive salary. And of course, the more you earn, the more you're going to be able to reach financial freedom more quickly. But it really depends on the expense side. I have plenty of clients that come into my program and they are making a lot of money, but they're also spending a ton of money. And so this is where I think a little bit of the confusion, takes place. If you look at somebody like Mike Tyson, he earned $400 million in his career, and in 1995, he was spending a little more than $400,000 a month, more than $5 million a year at just the base. That was just his base expenses. So it didn't include him going out and just buying a Rolls Royce because he wanted, or going out just him waking up every day, with the houses and that kind of thing, just the bills. He was spending 5 billion a year. 8 years later, after 1995, he filed for bankruptcy. So you can earn an amazing amount of money. You can be a sales manager earning, just massive amount of money. But if you're spending it, you're going. It doesn't matter. And we'll talk about the cost. There's just a huge cost of spending, which I think a lot of people don't take into consideration. Now, on the other end, you could be earning 30,000 pounds or dollars a year and only spend, 10,000 of those dollars, and you're also setting yourself up for a easier and lower threshold to be able to become financially free. So if you're somebody who's earning money and you're not spending a lot of it, it's going to be a lot easier for you to reach freedom, because also your threshold for what you need to make in order to retire is lower. So if you look at that person, let's say you're earning 30,000 a year and you're saving 20,000, and obviously this is a very hypothetical. If you're somebody in Europe, the savings rate tends to be a little bit different than in the US. But if you're saving a massive amount, then over the course of 2 years, you're basically every year you're saving 2 years worth of your living expenses. In 2 years, you've got 4 years worth of living expenses just in the bank. Now, your price of freedom is going to be a little bit lower than somebody who has, Mike Tyson's spending rate. So it's not about just about what you earn. It's about how you save, what percentage you save, if you buy a business, and all of that money can go to savings. Like I love when I get somebody in and they don't need to live on the income of their business. It's a very powerful. You can get into some very powerful strategies. It's why I've been talking a little bit more about having a holdco where you've got an SPV that is investing some of the profits from the other businesses that are part of your holdco. So what you want to look at is, based on your savings, right? How long would it take for you in your current circumstances that you're spending? How long would it take you to reach the point that you can live off of your savings? Now, that doesn't just mean spending your savings, right? So you can find out by calculating what you save as a percentage and looking at, how much your take home is, what you're putting in, how many years you want to wait to retire. And then you want to live off of about 4% of that is what they say. Well, if you've got $1 million, then you want to live off of no more than $40,000. Now, for a lot of you, you may think that the 40,000 is lower, but you wouldn't be paying the income tax on that 40. So if you've got, so say you're making 60,000 right now, even 70,000 for some of you, it's the equivalent of taking out that 4% there. Now, I want to take this and get a little more creative because, in addition to that income, we want to have income that's coming from our holdco that we're not having to work for. So, if you look at combining this power, you're buying a business, and that business is adding 50,000 a year to your income, but you're setting up that business to be passive. You win in two ways, because not only are you going to hit your target, let's say it's $1 million faster, but you're not going to need to take out that 4%, or you're going to get basically an additional capital on your in addition to the 4%, by having the $50,000 in income that comes from the business. So ideally, when I'm talking to people that are using deal making to move towards really financial freedom, I think retirement just has a different meaning now. It's like most people just want to be able to do what they want to do. It's not about having like, oh, I just don't want to do any work. So for a lot of my clients, they're happy to kind of oversee a holdco. But when you take that kind of perspective, not only does it move you to your goal so much quicker, but it can lower your goals. So, and for some folks, they will, have a $500,000 amount that's really needed for them to feel comfortable leaving their job. And then they're making the money from their business and they're continuing after they really retire, which is a unique scenario. They're continuing to put money into their stock market account, or their dividend. The heavy account is what a lot of folks will be doing that are looking for retirement. So, if you look at the stock market, even with inflation, I think some of the numbers that people think the stock market will do are based on historical averages. And I like to be a little bit more conservative. I think some people say like 9% is what you can count on. I like to do all of my calculations based on 7%. And if you're in the Patreon, I tend to do better than 7%. But if you can keep all of kind of your numbers very conservative, and they basically say if you're counting on an average of 8%, you can very comfortably take out the 4%. For me, I want to look at 7%. I'm really not planning on taking out 3.5. And so you're playing this conservative game. And so I'm just giving you some different perspectives on how to think about this game. And then you add to that the income from your deal making skills. Now, in addition to those deals, there you get into all of the peripheral type deals. Somebody was asking me today, like, so like, where is your income coming from right now? One of my partners in the public company, and it's like, man, it's just a lot of different places. Like, it's difficult for me to even explain. When I'm talking to Luke, and we're considering a interesting joint venture that involves a company out of Canada, and it's like with each little deal that generates a little bit more income, it's this deal maker perspective that creates a ton of power in diversifying your sources of income so that you can be very conservative with the amount of money that's actually coming out of your cash. So you can play this game and be a little bit more aggressive. So I have, some of my money that's in a very, just pretty conservative type of account, and it's based on dividends. It's got a certain amount that's kind of tax advantage dividends, but for me, at the end of the day, I've still got some money that's very aggressive as well. But even then, I think compared to, it's not day trader aggressive. So I'm not a big fan of I'm not a big fan of taking huge risks. But if you're somebody who's never invested in the stock market before, I would say just stick to the lowest cost global index trackers. I do think it is important to be diversified internationally. And if you're not going to do the studying, if you're not interested in the market and kind of playing that game and understanding how to generate income, and I do a lot with options in our special purpose vehicles under the whole co. And the other thing that is interesting there, I'm willing to be more aggressive. I don't, like I said, I like being conservative. I don't want to, risk money for the sake of risking money because for kind of outrageous returns with the potential of huge losses. But I do think that the fact that I'm generating the income from businesses, which is a part of what that income represents, I'm willing to risk it more. The worst thing you can do is be high risk with money that you are going to a job for. Y'all know how I feel about the money that you trade your life for. You're literally trading your life source, your time here on earth, which is your most valuable asset. Once you're off of earth, like none of that money matters. And so you're literally trading that infinitely valuable thing for something that they print at will at any point. So if you're not going to get in and not going to learn about this, then be conservative, but you can be a little less conservative than you would be if you're working for that money, if that money is coming from your deals. That's where the money should be coming from that you're getting aggressive with when it comes to investing and all of that. So some of the things to look at are accounts that are within Vanguard. I do like, dividends in particular because everything is based on income. I'm not as big on capital gains unless with those capital gains I'm using some of the options income strategies and options credit spreads that we use and talk about in acquisition hoco training. So when it comes to the savings rate and looking at what's going on and here in Europe, out in the UK and in the US, just across the board, the savings rates are pretty garbage. If you look at the UK, it's about 2.9%. In the US, it is high. It's higher than that, especially in recent years, which is a really cool thing. But when you take into the thing that they don't have in the UK is as much credit card debt. So if you look at the credit card debt, there are a lot of people that are hustling backwards because they don't realize that they are they're basically, kind of, it doesn't make sense to be saving. They should just be paying off debt. So the US is very weird when it comes to that. But when you look at those saving rates, like, typically people are going to be over 70 years old based on the amount that they're saving and the rate that they're saving. And, one of the things that I love about this, though, is that this is it's not just that, hey, if I save a little bit more, then I have this linear rise. If you are saving twice that rate. Let's say it's, instead of 3%, you're able to go to 6%. Instead of being 77 when you retire, you would be 61. So the relationship between the savings rate and the time to financial independence, it isn't linear. It's actually basically kind of exponential. So if you're spending all of your income every single month and never saving a penny, you're exponentially at the other side, and obviously you're never going to be able to retire in that case unless you've got kind of a pension, or you win the lottery, or somebody passes some money down to you. Now, most people are going to be in the middle of the extremes. You're not at the very high savings rate, but you're not just saving zero. And my goal is that even from a savings standpoint, that you get in the habit and you're looking at your finances. You're looking at your finances from a standpoint of my expenses. You're treating yourself, and this is one of the things that I'm always talking to HOCO folks about. I was talking to one of the newer guys today. I want you to treat yourself like a business. You should have a personal balance sheet, and that balance sheet isn't just financial. It's all of the assets that go beyond that, and you become kind of the first part of your holding company, which is a little bit of a different perspective. But I think that perspective helps in this regard because it gets you thinking about, okay, I want to run myself as a business. Now, years and years ago, my path started with this when my mentor um, got me to read a book called "The Richest Man in Babylon." And in that book, it suggested saving anywhere from 10 to 30%. I was already kind of in business and doing things, and my mentors helped me from that standpoint. And I knew I needed to be making more money, but I wasn't paying as much attention to just my personal finances. And I thought, but I was actually doing pretty good. Back then, my savings rate was about 42%. So I did this calculation. I'm like, okay, man, the richest man in Babylon said I need to be saving, 10 to 30. And I'm out here busting it out. I'm hitting it out of the park. I'm at 42%. So I, felt like, okay, I'm really going above and beyond. But I started to do a little more research, and there were a couple things that I have to be very appreciative of that I learned at that point. One was that, hey, you don't have to just spend the money that you make. Anytime you want to buy something, you can go buy an asset that pays for that. So back then, I wanted a Mercedes. And so instead of me buying the Mercedes, I did a deal on a little business that was basically, I was just a minority partner on, helped my friend buy the business. It's a little bit of what got me into what I'm doing now. And the reason that I coach people like, man, why you should be adding your under, like even people in the actual Hope for Code program. Shout out to Alex and Josh. They're like, man, this is so valuable. You're just very underrated. More people should know about this, but the goal is to be able to do deals. And one of those first deals was I invested in a friend. He wanted to do a deal back in Chattanooga. I got a little percentage of that, and that percentage was enough to pay for my Mercedes. So I was able to go out and get a Mercedes. But the other side of that was I did a little bit of research on how much people were saving, and I realized there were people that were blowing my 42% out of the water, that were serious about retiring and they wanted to retire earlier. So there were thousands of folks out there that were, online blogging about saving at a 50% rate, 75% rate. I'm like, what 75% rate? And they were doing this in their 20s and 30s. And, a lot of them had plans. They were like, hey, I want to retire by 40. And so that was a huge inspiration for me back then, that okay, that was kind of my first goal. I got to take my amount. I got to get over 50%. I got to go from 42 to 50. So I didn't feel like that was far away. And then my real goal was, how can I stay at a 75%? And so the one thing that I noticed about the people that were talking about this online was that they were aggressively pursuing retirement, but their income was fixed. And that's where us as deal makers, we have this very unique opportunity, because all of their focus was, how do I save money? So it was just a tremendous amount of couponing, a tremendous amount of cutting every corner. I sold my car today. I'm got a bike, just like everything. Like I can't take my kids to this camp. I gotta call a friend. They're gonna tell me, because I don't want to spend that gas. It's like, whoa, okay, this seems a little intense, maybe a little insane. But I got it because that was almost like their business. So they were in the business of saving every dollar. And I wanted some of that to rub off on me, where I was a little bit more thrifty, because my whole focus had never been on any amount of thrift. My focus was, okay, like if I want something, I'm going to just go make more money. And I think that the right place is getting everything balanced, being able to get really aggressive in both, but never spending money. I think the biggest thing that I was very conscious of was, the most important place to like cut every corner is in every amount of money that I have to work to earn. Like, you don't really deserve to spend that money, because you should be trying to figure out how to get money to make money for you to spend. Like, I am a very strong believer that the money you work for, the only reason that you're working for that money is to invest that in something, and then you can spend the money that comes from investments. I think that, and this was something that definitely was an impact from a mentor of us. Like, poor people spend their money from a job. So as soon as you start spending money from a job, you're putting yourself in that poor category. Wealthy people spend money from that comes from their assets. And so obviously, I have a lot of folks that are watching this. You're going to be in the place where you're spending, and even for me, when I was doing deals, I still was working. I was hustling. I did not. Number one, I didn't have the knowledge to kind of do and structure deals the way that I do now. But it was, whatever, 16-hour days, everything was work. And so, when, like I said, when I did the Mercedes, I had to figure out, okay, I got to go structure a deal that is a passive deal, that isn't money that I'm working for, so that I can buy this Mercedes. Now, I shouldn't even buy a Mercedes. I was in my 20s. That was dumb. It was very, very dumb. So, I'm giving you my real life experience, and now I can look back and learn from. But the right thing was the thinking on the assets. So if you look at even, kind of my path for that year, after discovering kind of both sides of this, discovering, okay, how can I cut every cost that doesn't make sense? How can I make sure that 75% of the money that I work for goes to an investment, and then creating whatever I have to do in order to make that 25% enough, so that I was, it was basically living off of that, 25%. And it probably took a year for me to get to the point where I went from that 42%. Getting to 50 was very easy, and then getting to 75 was a little bit more work. But I was in a little bit better place than the folks that were just focused on expenses, because I could use the income side to just vastly accelerate my path. So, one of the things I did at that point, I took the bold step of like, okay, I had some real estate stuff. After doing the calculation, I realized that, when the rentals had cost, and a lot of these things, it wasn't fast enough. It was too slow of an asset when I compared it to buying businesses. So I took a really bold step, because the conventional wisdom was, oh, like rental properties and that kind of thing, you can live off of these and pay these down over time. They're going to appreciate over time. And I just realized, like, okay, it's over a long period of time, and I'm kind of getting back into this mode of, okay, when I'm 50, when I'm 60, I'm going to be financially independent. And so I sold all of my real estate a little bit after that year of getting to the 75%. And one of the things was, I just look back, it's like, man, like one of the things that was keeping me from the 75% was HVAC would go out, or, this plumbing issue would go out and that kind of thing. But it was all in the name of, oh, in 15 years, it's going to be this and that kind of thing. Well, we know in businesses, you do a deal today and the cash flow is massive. It's coming in. It's just about a 10x on the ROI, because we're buying it at a two multiple or a three multiple, and that real estate's at a 15 to 30 multiple. So I didn't have to be some black belt, grandmaster, lord of financial independence to figure it out. It was just trial and error of looking at the numbers and actually doing calculations. It's amazing to me the number of people that will spend hours and days and years of their life checking into a job to earn this thing called money, and never spend time doing calculations and projections and understanding their specific path that they're going to use that money towards financial independence. And the tip number one is just tracking your spending. So even before you get to projections and calculations and comparing investment and those kinds of things, most people just aren't tracking their income, tracking their expenses, and tracking the investments that they do have. A lot of you do have investments and you're not really tracking it to decide. It took me really tracking to decide, okay, you know what, when I compare the real estate to the business stuff, I got to get out of this real estate madness. And I had millions of dollars worth. It was over 30 units, 30 something units. And so it set me back because the real estate market wasn't good when I exited. But I knew that, it was just, okay, if I could double down on this other stuff, on the stock market, on the deals, then I was going to be reaching financial independence, kind of those goals a lot quicker. But most important factor is tracking your financials. I think you're going to be able to reach your goals just a lot quicker than either turn a blind eye. I think some people turn a blind eye just because they don't want to know. Other people, just it's not their what they want to spend their time doing when they're not working. But Peter Drucker famously said, if you can't measure it, or if you aren't measuring it, you can't manage it. And I think for a lot of people, it's a total game changer. Early on for me, just tracking has always been a game changer. Even if I do get out of the habit of it, just going back, it's like it just gets you excited no matter where you are about, okay, here is that next goal, and you have some focus. I think just having that goal of where you're going helps to keep you on track. Obviously, you're not going to stay on track if you're not focused on that goal and tracking where you are right now. So I think forming that habit is really important. It can alone transform your personal wealth, get you moving in the right direction. And then I think as you get into business, it's also inadvertently going to help your businesses. So you can get into a business and it's going to become a part of your overall financial picture. But yeah, I promise that will definitely vastly improve. It's a great first step, no matter where you are, and having that self-awareness around some of your spending habits will help you be more conscious and aware as you start to track every penny of your spending and then every penny of your earnings. And if you spend for the next 30 days, let's say you're using Excel. I love Excel. I'm kind of old school. I was just talking about the fact that like we have QuickBooks, also stuff, but I'm just a fan of Excel because you can get in there and kind of play with the numbers a little more easily. But there are a ton of apps out there where you can do this whole tracking process online. If you have loans, it can track those as well. And you should always have kind of the last 12 months easily pulled up. So you can track, okay, here's the trend. And obviously you can go back even further, but you should always not just be looking at, okay, here's what I'm doing today, but what's been the trend over the last 12 months. Very, very priceless, very important to play with that data. Now, here is another tip. I like to make it kind of a game. So if you apply gamification to this and any other area you want to improve in life, I think it helps with engagement, it helps with enjoyment, and it helps with just making sure that you execute. So this can be something that is becomes fun because you've done the work to make it fun. So you can take a look at what you spent last month. And then, the most simple game is, hey, let me try to beat it this month. What are the steps that I can take this month to spend less than I did last month? And, then you can have the game of, okay, if I can do that over a 12-month period, I will reward myself with, whatever you want, an amazing dinner, a trip, or whatever. And then you kind of move that to a monthly basis and then an annual game as well. So there's a lot of ways to think about that, but make it a game with yourself that you're going to get creative about how to make that look better and better. And then on the other side, obviously, gamifying kind of the investment account of how you're going to grow that, how you're going to increase that, how you're going to find deals that are going to put more money into your investment account. So another tip would be to go for what I call the effortless wins. I'm always talking about buying businesses with low hanging fruit, but this concept is also kind of, I guess, in your personal life. You want to get the momentum going, and for some folks, there's no lifestyle changes that really need to be made. You can look at just reducing credit card and loan debts, calling and renegotiating deals. You can refinance a mortgage, finding the best insurance. For some of these things, it can really be simple. And I think sometimes we don't do that little extra work of finding the comparison sites and whatnot, because it's just not top of mind. And this is where I think that for somebody who is doing or playing the game, I think it can make it more of a priority. Like if you realize, okay, I've got to figure out how can I save money this month over last month. Oh, I haven't gone to comparison sites and tried to figure out, where I can get the lowest cost insurance. Let me make sure I do that. That'll be where I save this month. And so by making that a game, I think that helps you become a winner. Now, for those of you that are doing deals, this gets to be a lot of fun because there are so many deals that are on the market right now. And one of the things that we're doing within those deals is we'll buy a business, and obviously the business has a certain amount of income, and most of the time, it's got a certain amount that's just kind of sitting in the bank. And for most people, they're not making any money off of that. And so, in addition to starting to do very conservative investments with that, we've also got the amount of income that we're getting paid, and we want to take a certain percentage of that and add that to our personal income, and then a certain percentage of that we're going to add to the business trading account as well. And the reason that we want to do that is we want those percentages in the personal account not to get too high. We basically don't want you to think about that money being within your personal budget. We want to build this other account that's just getting built over time by this business. And again, as I was saying as we started this video, when you're putting that money over there, you can take more risks. And what I found is that that money can tend to grow if you're using the right strategies. So if you're interested in some of these strategies, I have a course that I'm going to release to the Patreon. This is usually just our acquisition holdco trading course. And it's, they get access to a lot more. And they obviously have where we help them build out their special purpose vehicle. But the foundational training I am going to release to the Patreon members, and that's coming out on Friday. So everybody who is a member before Friday will get access to that. People who join after Friday or aren't a member on Friday, you will be able to pay and you'll get a discount on it. But you'll get access to that free if you are a Patreon member by Friday. So definitely check it out. Thanks for checking this out. My goal for you is financial independence. And I think, some of those steps that we talked about today are a great first step. Be sure to tell me in the comments, what's your goal? Are you looking for financial independence? Are you just looking to get a deal done to supplement or as a side hustle? Tell me about your goals. And if you are looking for financial independence, how are you achieving it? Thanks so much. Talk to y'all soon.